Hello, everyone. Thanks for joining me. In this series, we are talking about impact in unexpected places. So, impact doesn't always look the way that we expect it to. And this series is all about exploring that. So, it's about bringing in people whose work creates impact in ways that are not obvious and asking them to help us think differently about what it actually means. So, today I am speaking to Laurens Brisbane, who is the founder of Two Factor Capital, a fund that takes short positions, meaning that he invests in the belief that certain companies are overvalued and profits when he is proven right. He started investing at 14, he's 19 now, and his work sits at the intersection of deep research, independent thinking, and going against the crowd. This is not the most obvious place to start a conversation about impact, which is exactly why we are here. So thank you for joining, Laurens. How are you feeling today?
Good, I'm feeling good. Thank you for having me.
Thank you for having a conversation with me. I'm going to start with a random question. Do you think that money follows the truth or the best story?
Do I think that money follows the truth or the best story? I think definitely in the short term, money can follow the best story, even if the best story is like being peddled by a functional snake oil salesman. Because some of the companies that I've short have had valuations as high as like $5 billion, and that's nothing to sneeze at when you're shorting a biotechnology company, even if the science behind it is totally false and the drug would never work. So definitely in the short term, money can follow a story, but in the long term, we'll always see the truth prevail when the data comes out, and there's nothing you can really do to stop that. You can't change the laws of physics. So
All right. So you believe that people will follow a story to start off with, but eventually the truth will always come out. So, I mean, that's a very strong position to hold. And I'm going to ask an obvious question. You started investing at 14. What was something that you were trying to figure out when you were 14?
when I was 14, I was trying to figure out how to get more pocket money and also how to convince both of my parents to let me open a brokerage account because even at 14, they were like, what's this kid gonna do? He's gonna lose all of his money. All of his money is saved up. But so it was a struggle to get them to give me unfettered access to a brokerage account in their name too, because a 14-year-old cannot have one.
In their
Don't tell
name.
anyone.
Wow. Okay.
So that was my main goal as a 14-year-old, was just a purely financial struggle. But as
Okay,
I've
so let's be realistic here for a second because usually 14-year-olds when they are trying to figure out pocket money, they'll be like, "Oh, maybe I'll go wash some cars," or I don't know, there's no newspaper routes anymore, but maybe these days it's about crypto or creating content or something like that. So, where did this interest in investing come from? Like, where did it even come from in your conversations, or how did it land into your consciousness of like, that's what I'm going to do? I'm going to start a brokerage account as a 14-year-old.
I think a lot of it came from this person I watch who did live streams and still does do live streams on YouTube, where he just talks about investing and science and the business adjacent fields. And I think that sort of put an idea into my head. And it's like, if this guy can do it, I can maybe try and have a go at it too. Even as a 14-year-old, I might have had a lot of hubris. But regardless, yeah, I reached out to him and I was able to get some sort of mentoring and teaching in investing, which was sort of invaluable. And just from there, it solidified my interest in the markets.
That's really interesting. I mean, I know that, family dynamics play a really important role in the way that we shape that shapes our thinking and our interests. What kind of conversations were you guys having at the dinner table that kind of brought you to, I know, I'm going to look at YouTube for people that are investing. Where did that come from? Like, what kind of conversations are you having at the dinner table with your parents at that stage?
I think the dinner table conversations I was having with my parents they definitely helped me think about the way the world works and how I can sort of be in this world and what I can do. It was a lot of philosophy, a lot of history, interesting conversations. Sometimes they got a little bit lengthy over dinner, but I'm definitely grateful for that sort of intellectual influence on my daily life. It's not like talking about like the daily like AFL store or something like that, even though my mother is very interested in AFL. So I mainly talked about this stuff with my dad. But yeah, I think it was very important for me growing up to be able to talk about these more like grown-up topics as a 14-year-old and have someone
Mm.
to meaningfully engage with about it. Yeah.
So, in our previous conversations that we've had, we talked about, and we'll get to what shorting is in a minute for those that are not familiar with the concept. But one of the things that I know about shorting is that it takes a lot of conviction, and you're going against the grain of what everybody is saying. You're going against the story. So where does that come from? That idea of like I'm gonna, especially as a 14-year-old that is very much influenced by peers, where does this come from, this conviction to be able to say, "No, I'm not gonna listen to this, I'm gonna go do something else, and I'm convinced that this is the right thing to do." Where does that come from for you?
I think my sort of contrarian nature would come from just people I've studied in business and in life. I know I read Peter Thiel's book Zero to One when I was like 15 or something, and his whole idea is that you need to find one specific truth that everyone will disagree with you on and try and monetize that. And
Oh,
so I think
interesting.
that definitely had an outsized impact on me as a child. I always sort of went against the grain. When people studied like 80 hours a week in like the finals of exams, I was sort of just reading SEC filings or something like that. So I never felt a need to go with the crowd, and I think that's transferred over to my investing activities.
Interesting. When I was growing up, I had some pretty strong influences around that shaped my thinking. I had a cousin of mine who's 9 years older, and they came to live with me. He came to live with us as a family, and he decided on a curriculum. And part of that curriculum involved the art of war, Machiavelli, a whole bunch of other philosophical books that really I was like, okay, well, this is interesting. I think that it planted a lot of seeds that helped grow my thinking as I developed, but I'm not sure that as a 14-year-old I had the maturity or the ability to be able to really, get what they were saying and be able to apply it to my life. I was a contrarian, and I think that one of the things that my family was very strong on was that you have to be yourself and be okay with being who you are. Do you feel like that's something that your family also instilled in you? Is this sense of self and the sense of confidence in being able to express yourself in the world?
I think, yeah, I think they definitely instilled the virtues of maybe self-confidence and things like that, because when you're a small child, you're obviously very very deeply influenced by your peers, and so if you sort of go against the grain or something, it might be harder to, break into like the hierarchy or social circles in primary school or something like that. So I definitely think that, yeah, my parents and my reading definitely had an impact on me and my sort of sense of self as a young child.
Interesting. Okay. So, for those that are listening may not be familiar with what shorting is, can you explain it to me like I'm a 5-year-old or to someone who has background in investing? What is the short position? What what does it look like in practice? Tell me more. Tell me everything.
Okay, so if I were to explain short selling to someone who may not be very familiar with the stock market, I'd start by saying that everyone knows that you can go long a stock, which is when you buy a stock, you own it, you own part of a company, and you hope it'll go up, increase the value of your shares. But when you short a company, you're actually betting that the stock will go down in value, and you're hoping for the company to basically go bankrupt. Is your is your end goal? That's how you would make the most money. But the problem in shorting is that obviously a company can only go down 100%. Like you have a
Mm,
capped limit on your investment. Whereas if you're a longer company, the company could go up 100, 1,000, 10,000%. And so short selling is a very risky endeavor in that you can lose multiples of your money if you are not right. So definitely maybe a bit risky giving that to like a small child, but I think it's turned out pretty well.
I mean, you are 19, so you're no longer a small child. Well, how would you define yourself? Do you think that you're a mature adult at this point?
I mean, I think it's yes, the law says I am. When I can sign a contract, I'm a mature adult. That's what I look
That's not
forward
really a
to
fair
on my
question, is
18th.
it? I mean, I don't really consider myself to be a mature adult, so, So what part of shorting do you feel that people usually get wrong?
Well, when if you explained the concept of short selling to someone and then you say, "Oh yes, I'm betting that this Alzheimer's company will fail," they might be like, "What are you doing? Why would you bet against this company that's trying to make a life-saving drug?" But when you sort of understand the market more, you'll see that when you buy a share in any company, you're not actually influencing the underlying operations of the company. You're simply trading with someone who already owns a share in the secondary market. So when
Okay.
you short a company, it's also the same thing. Your shorting will not impact the underlying science of the company. It won't impact what the researchers are doing on a day-to-day basis. You're simply taking a position that is saying, I don't think this company is doing the right thing, and I think it will probably lose money for its shareholders. So if you sort of see that, it becomes less of a moral dilemma when you short a biotechnology company.
Okay. So you feel that some people, what they get wrong about it is that they see it as a binary good versus bad, whereas you see it as something that's a little bit different than that.
I see it that like if you think about the market as like the nervous system in the human body. And
Okay.
it's like sort of capital is sort of like the blood flow through the veins. And if you give capital to this company and it's going to fail, you're basically sending resources where they do not belong.
Mm.
So when you short a company, you're basically giving an indication to the market that yes, I think this capital is flowing in the completely wrong direction. And when you're buying into a company like that, you're also stopping companies with actually promising science from getting the funding or promotion that they need.
Hmm. So would you consider your role to be what role do you see that you have in the market?
I think my role in the market by having a short position is basically just to try and make the market more efficient. Because when I have a short position and I publish my research, even if I convince one person to not invest in this company, then I'm preserving the efficiency of the market, even if it is on a very, very minute scale. I'm still helping this person sort of save their money and not to buy into this company. And a lot of people, like I can talk about a story later where there was someone who led thousands of investors into like near bankruptcy, some of them. And I think that's a really terrible thing when you sort of lead a herd into basically what is like a spike pit at the bottom, and it's just a giant red candle down, and your brokerage account is just gone. So if I can stop one sheep from sort of following the herd, then I'm happy.
I mean, I think that that's that kind of it's kind of interesting in terms of what you said around being a seeker of truth. That's kind of what I heard from you in terms of what was part of the thing that you guided you to start off with in terms of being able to invest and being able to understand. The first question that we asked was, money follows, is it the truth or the best story? And you said, well, to start off with, it's the best story, but truth actually always prevails. So do you feel like that kind of that belief in making sure that the truth is out there and that you're a true sayer. Do you feel like that kind of fits with your positioning and your investment positioning, I guess?
I think, yeah, I mean, I think my investment positioning and the truth are sort of commingled in the sense that I am trying to seek the truth in any company, but there's always a possibility I might be wrong and the company might have a really great drug. And I welcome that. But as a short seller, you have to be really focused on the truth and the science and the fundamentals of any company because mostly like narrative sort of propels a company forward. And if the narrative gets really divergent from the actual truth, then you definitely have a position where a company might be overvalued and some short sellers might want to step in.
Interesting. It's almost like you see yourself as like a market corrector.
Yeah, yeah, I think, well, I don't have the capital in order to actually influence the market, obviously, but I think
Yet.
I think of myself less of a market corrector and more like just like an alternate viewpoint,
Mm.
because if you're an investor, like a retail investor, and you know very little about biotechnology or biopharmaceuticals or anything like that, and you see someone who seems to be a sort of authoritative source on the matter, and they're along this company, you might not actually encounter anyone who will give you a differing viewpoint in that
Mm.
space. And so I think I would see myself as the person who might tell them to, slow down, have a think about it. You don't really know what you're getting into here. This guy probably doesn't know either, really. So yeah, I would try and just stop people from betting their life savings on something, you know?
If I reflect on my PhD research around this, and which was taking a look at how do early stage investors make decisions, what is their interpretation of impact, and how does the external environment or the narrative of the ecosystem influence or interact with that? Some of the things that I found were around that the investors don't make decisions based on rational numbers. They make it based on their identity and based on, their values and their perceptions and their backgrounds and their history. And also part of it is also based on the narrative that exists within the ecosystem itself. And I think that if I think about what is my position, what do I see my position as within the entrepreneurial ecosystem, the narrative is very much one of equity and of venture capital, and growth is the most important metric of success. And how do we view success as an ecosystem? It has to do with how many unicorns we have and how many exits we have. And I am very much a contrarian in terms of that position. And I feel that there are a lot of different stories that can happen that are not necessarily related to unicorns, but a success can look like a lot of different things. And it's really hard sometimes, I find personally, to be able to stand up and say, you know what? I don't necessarily believe that this is the right way to measure success. There are other ways to be able to measure success. Or the outcomes that we are looking for are not necessarily these specific outcomes. They can look like something else. And I know that, like, for me personally, that requires a really strong belief in myself, a really strong belief in my identity. I will second guess myself all the time, like, okay, Tia, but do you have enough data around this? Standing up against the crowd is something that is very challenging to do. Is that something that you navigate as well as within your like investment position? Because it's a very different position to hold.
Yeah, I think sort of the mentality of the crowd does play into it. Initially, especially when you're just looking into something and you see maybe hundreds or thousands of people going, this company is the greatest thing to ever be listed on the Nasdaq. You might second guess yourself. But if you really do a deep dive into the company and you understand the science and the drug behind the company, like bring it on. I'm ready to talk about it, and I'm ready to perhaps change your mind. I think like the science is the most important thing fundamentally. And if the science doesn't work, the drug won't work. And there's no amount of narrative that can change that. So yeah, like the crowd can be irrational in the short term, but ultimately when the data comes out, the crowd really won't matter that much.
Okay, so the investment thesis that you're working on right now in the two areas that you're specifically have invested in or shorted are the biotech and quantum, correct?
Yeah.
And how do you like you're not formally trained within those specific areas, I'm assuming?
No,
So
no.
I mean, so how do you build conviction in areas where you're not formally trained?
I mean, yeah, I think that's a good question because it's definitely fair to question my credentials as a 19-year-old trying to
No,
give
no,
their
no.
opinion.
Sorry. I'm not questioning your credentials as a 19-year-old. This is like, I would say the same thing. Like if I can't say that I am across ag tech and health tech and biotech. And so, but I do have a conviction about the way that I think things should be, but I'm not an expert in all of those different elements. How do you build conviction in a case in areas where you're not formally trained? Like, if you're not a scientist and you don't have a background in science, then how do you create that? Can you talk to me a little bit about that?
Yeah, I can definitely talk to you about like, yeah, how do I build conviction when I'm not like formally trained? I would say that the information is out there for anyone who really wants to learn. Like it'll take you years to sort of get a really good grasp of it. But like a good resource even is just you can go onto the Harvard Medical School website and see like the textbooks they give students and the chapters that they tell them to read and all of that. So the information is there for those who really want to learn the space. It's also great that I have a network of people who I can sort of learn from and talk to in these really niche sort of fields. So really, if you're in that space, it's like you want to bring more people in and try and teach people about it. But yeah, the information is always there in nearly every field. If you really want to learn it, you can.
How did you choose how did you choose biotech to start off with? Like you had obviously a lot of different options. Why was biotech something that you felt was important to really focus on that field?
I think Biotech is an important field for me because it's possibly the most black and white sort of field in the market because
Okay.
either a drug works or it doesn't work. And
Mm,
there's really no in between. Like you can do like post hoc analysis or something like that of the drug, but ultimately the drug works or it doesn't. And so then you have the potential for some really like violent catalyst events in the market where a stock can go down like 90% in just a matter of seconds, or it can drop 500%. And so it's really a good feeling when you get it right after you've done months of research and all of that. And there's a real definite time frame of when you will see if your research paid off or not.
interesting. When I think about like biotech and quantum, biotech, it's easy to frame as something that would be considered to be impact. But in quantum, that link is a little bit less clear. So how do you think about that difference?
Yeah, yeah. I was short the quantum computing sector after I sort of talked about it with some other investors that I know because there were some companies that had like maybe $200,000 in revenue and they're worth like $10 billion. And
Mm,
so if you sort of take the fundamentals of any market, you can sort of see that that is really divergent from reality. Like you're not going to get a quantum computer as like your home personal computer. It's just not going to happen. So yeah, I mean, I had to learn a lot about computing and like the algorithms that these computers apply and everything like that. But it really all just comes back to how invested you want to be in a space and how much you want to know a space before you take a real like significant view or position on any sector.
how do you decide on which sector you're going to choose then?
A lot of investing actually, like I decide what sector I'm going to choose. There's a lot of like discussion between people sort of in investing. Like there are real circles where you can just sort of ring someone up and be like, "Hey Bob, I think this stock is a short," or "I think this stock is a long." And a lot of ideas and positions are actually generated from just someone you know, just doing some cursory research into a stock and being like, "Hey, you should check this out." And then you might go and do like 4 months of research on it and then be like, hey, I think I agree. I think I agree with this guy. I might take a position on it. Yeah, but aside from that, in biotech, it's a lot easier to sort of find companies because you know when the clinical data will be released. And
Mm.
so you might look ahead like 6 months or something and see a company and be like, I wonder if this XYZ drug will work or not. And then you have 6 months to find out.
We're living in a time where there's so much changes that are so rapid. I can't keep up with everything that's happening. I know that that's a problem for a lot of people that are either in the space or not in the space or just adjacent to the space. There are going to be a lot of really rapidly changing sectors that are going to be difficult to be able to identify what is true and what is not true. And I know that with your short position, you do a lot of really in-depth research. How are you navigating the uncertainty that is happening both globally, like geopolitical forces that are happening right now, but also just technological advances that are happening that must make your role a little bit more difficult?
Yeah, I'm navigating like the changing sort of technology of the world really by just like hoping that the SEC will do its job, I guess.
Sorry, for those that don't know, what is the SEC?
The SEC is the Securities and Exchange Commission, which regulates market activity in the United States, and it's their job to sort of prosecute anyone who they don't prosecute, they sue people to sue anyone who is publishing like really false or misleading data or anything like that. You can't always rely on the government to do their job effectively. I think as we all know.
Yep.
So asides from the sort of big brother in the market sort of telling you what is true and what isn't true, a thing in biotech that can never be sort of like AI spoofed is the patients. The Western blot scandal is always a big thing in healthcare research. But you could fake data and you could make a drug off of this bunk data and you could give it to a patient. But ultimately it will not improve the patient. So the patient and their welfare is always a sort of final arbiter of whether your drug is effective or not.
So I guess that kind of that answers the question about you would want to choose sectors where it's easier to be able to see whether the impact is going to happen or the impact is not going to happen.
Yeah, I think you should definitely choose sectors where there is like you can get sort of real world evidence, I guess you could say, of
Mm,
impact. Healthcare and biotech are really good sectors for that, but I can think of other things like even in AI, like if you're an AI developer or an AI researcher, you could benchmark your model on various, companies that provide that service. You can see which one is performing better or worse in an objective manner. And I think that a real big thing that'll come in the future is sort of like a solidification of objectivity. Because if you can't accurately or reliably measure something, then that's going to be a real problem. When I could just ask like ChatGPT or Gemini or whatever to spoof up a duplicate to that.
interesting. I would ask people, what is your definition of impact? And in academia, we now say impact is a multidimensional concept.
I think that my definition of impact would be in investing, helping like fellow market participants, I guess you could say, because ultimately I'm aware that that my capital flow will not actually meaningfully influence the daily operations of virtually any company right now, but I can and do have the power to sort of open people's minds to what I believe to be the truth, and then they can take that into account. And even if it's stopping someone from putting their life savings into a company that I don't think has a good drug, I might get them to sort of go half or like a quarter of
Mm,
their initial position. And I
mm.
think I think that's probably a really good impact to have, and it keeps the market efficient even on a really minute level. But you're definitely having an outsized impact on that person's life and sort of financial well-being if you just get them to have a second look at what they're doing.
Why is that important to you as a person, not as an investor?
It's not fun to see people just lose their life savings, I guess, unless you're a really mean guy. I don't know. But it's also important because like I've been there. Like I've been new to a field and I've had no idea what I'm doing. And I've always looked for someone who might be really experienced in the field who's able to tell me sort of if I'm going off the path, if I'm going somewhere where like I might lose my money. And so it's important, I think, that you're able to sort of guide people in investing and in the markets because there's a lot of like charlatans and scammers out there who will just take their money and really not give them very good advice. So it's important to be a sort of guiding figure, I guess, once you've been guided.
You feel like that's something that you do in your personal life as well?
I would hope so. I mean, I think yeah, I guess it's a duty for people to try and, well, help your fellow man, I suppose, but you also have to be selective in the help you give, I think.
Oh, okay.
Especially
Tell me more.
Yeah, especially in the markets, for example, like I know someone who I always constantly disagree with, and we take like always opposite positions on any given stock, and it's like I'm like 4 for 4. So if someone if someone is just like unwilling to listen or anything, like so be it, it's your money. But there's always people who will be willing to not go 4 for 4 and sort of what other people who are experienced will tell them and sort of learn from them and then just reconsider if they really know what they're doing.
Mm, interesting. When people are making high stake decisions with incomplete information, what are some of the patterns that you consistently see?
When people make high stakes decisions with inconsistent
Incomplete.
incomplete information, well, slip, I guess it's a bit of both. But I see like this can range from the investor with like $100 in his brokerage account to someone with like $60 million, which is an interesting story we might discuss later. But I always see a sort of like really getting emotionally invested in a company
Mm,
or in a story and sort of investing like righteously, if you will. Because if you genuinely believe that you're on the side of this company that's going to create a treatment for cancer or some other, really serious disease, you will probably, even if you don't realize it, block out some of the uh, the the opposing viewpoint because it becomes less of an investment thesis and more of a moral thesis, I think.
How do you do that? I mean, I can ask the same question to you, right? Because how do you know that what you're doing is not, because you've said what I do is a it comes from a moral conviction of being able to be a truth sayer to a certain degree. And so how do you know that what you're like the position that you're taking, both from an investment perspective, but also as an individual, how do you know that what you're doing is right and what the other person is doing is wrong?
I think I know what I'm doing is right because I try and just completely separate any emotion from a position, which is something I'm not an expert at, and it is very hard to do. And some of the greatest traders in the world still have trouble with it. But when you're evaluating something, you just have to look purely at the facts. You have to try and discard any preconceived notion you might have about a company or its CEO or anything personal like that. And you just have to look at what actually is the reality of the company. And it's very hard to do, but I think it's probably easier to do this from the perspective of a short seller than it is from someone going long on a stock, because just inherently baked into a long position is a really large aspect of narrative. And on the short side, you have to sort of be anti-narrative, and what would stop the narrative is the truth.
I I have some challenges with what you're saying because, well, because what is the truth, right? Like the truth is it's not the beauty that is in the eye of the beholder, although that too, but the truth in history is written by the victors. Truth is subjective to a certain degree. We've talked about before about you use first principles and priori deduction in practice to be able to do some of the evaluations and some of the decisions. Can you talk to me a little bit about that and how that might help in separating your emotion, your decision?
Yeah, the framework I use is a priori, so basically deducing the truth from assumptions you have before the fact. And I think this is how science really is sort of conducted in the modern world. Like if everything you know about a molecule is like you know everything you can about a molecule, and then you have someone purporting that it will do something that it's never ever done before, and there is no rational basis as to why it would do this. You can obviously see from an a priori perspective why it's really highly unlikely that it will go this way. So I think like ultimately science is very, very quantitative. It's very binary. It works or it doesn't really work. There's no really there's no real room for like subjective. It might work if I just do this or this or this. Like it's just a matter of physics, and you can't really change the laws of reality. So I guess that's the ultimate arbiter of the truth in my field.
Interesting. Okay. Now, I mean, just to go back to shorting the short position for a second, from my very limited understanding of shorting, a lot of times that can involve talking trash to about the founders or about the investors or just, being able to create some kind of like negative narrative in order to be able to sway the market. Have you seen things like that? How do you feel about that?
Yeah, I've definitely seen when people can make a negative narrative about a company. A lot of people sort of call it like short and distort, which I don't necessarily buy. But like I think you should really just tell it how it is. Like if a company founder has gone like naught for three on making a successful company and he's had like a history of failure, then yeah, I'm going to be beating the drum like this guy's a total failure in business, and you really shouldn't give him any more money. But when you sort of like blur the line between the truth and a narrative of just like pure negativity about a company, then I can definitely see how that might be a bit of a dilemma for a short seller there. But we can also see that the SEC tries to prosecute people like this. There's a
Mm.
famous short selling firm that a lot of people accused of just like really, really going too far in their criticism of companies, and the founder got like indicted for securities fraud. So I think yeah, there's definitely like checks and balances on how far you can go when sort of distressing a company.
I mean, you were just talking before about, if a founder is three times unsuccessful, then they should not be doing another startup. You shouldn't be trusting them in terms of another startup. That's really interesting because part of what actually is required in order to be able to develop new technology and develop new ideas is the ability to be able to fail, to test, to try, to fail. and to see what else you can create and learn from that specific failure. How do you balance those two of like, well, you're not telling the truth versus there's a trial and error that is required in order for us to be able to make progression? Because I mean, innovation is so uncertain as it is. If I'm working with someone who's doing climate tech and they say this is what is going to be able to capture carbon, and in some cultures, failure is considered to be a very good thing to have because it means that the founders are more experienced and they have a better ability to be able to do something better next time.
Yeah, I think in my space of like biotech and pharma, there's definitely a bit of a conflict between conventional sort of startup culture, like if you don't get it right the first time, just try again. But I can tell you about a company that it might change your perspective.
Go ahead.
The founder and sort of CEO of the company basically had a notion where if you crush up orange juice peels and you really like crush it up to like be a liquid soluble sort of thing and you inject it into people, it might cure their rare disease or it might have a really like statistically significant effect on their rare disease. And it's like that company obviously failed, but should we be supportive of this guy who thinks that you can inject people with orange peels? Should we support his next startup endeavor? And so I think you have to analyze the history of the founder and why they failed. Like it would be a totally different story if this guy had like a rational drug design and it just didn't work out versus actually having like an off the wall idea that you should never fund again.
I would argue against that because I would say, well, I don't know. I can see the logic. There is vitamin C, and vitamin C has known to do things that people don't necessarily think. And a lot of times, unconventional ideas and breakthroughs come from, something that a field that is completely left field to what you actually think. And sometimes it comes from people that are not necessarily within that field. So, how do you take that into account when you're gathering information and when you're making bets on a short position?
Yeah, I mean, I take it into account when I take position by basically having like a real understanding of modern drug design because in historically obviously drug design has been sort of irrational. Like you might get like the venom of a snake and it might have a really interesting effect on some really niche medical process in your body. But in the 21st century, it's sort of the opposite. And you'll see at these huge firms like Merck or GSK or Moderna, drug design is highly rational. Like people find a physical process in the body and they design a drug around that process that will have an effect and modify it. And this is designed by like bench chemists and everyone from like a chemist to a like data analytics person. And so it's a very quant heavy process. And there's basically very, very few drugs that are just discovered via entropy. So I think if you take a look at that and you look at the actual like best practice in modern medicine today, I would say it's definitely better to design a drug rationally than sort of just crush up orange peels and hope for the best.
I mean, that's fair, right? So let's go back for a second to the idea of making decisions in uncertain environments and having the conviction to be able to do that. So when you are making decisions like very high conviction decisions with other people's money, how do you think about that responsibility?
Yeah, when I'm making decisions with other people's money, like ultimately I have one duty. I have one legal duty, which is to deliver the maximum value to my shareholders or my
Hmm.
LPs in this case. So that's how I approach it. If I don't think something will generate the most value when I deploy the capital, I won't do it. I will always try and get the best returns for my investors because that's ultimately why I know they gave me money. So I think it's sort of like a breach of duty if you try and invest in things that might be biased from your perspective or biased towards this other company or person that you know or something like that. Because ultimately, it all comes down to why did they give you money? They gave you money because they think they'll grow their money, and that's your job. And I think you should try and execute that the best you can.
First of all, it's interesting that you use the word money and value interchangeably and returns interchangeably, because if you think about what you mentioned earlier around your definition of impact and the position that you hold from a moral perspective around being able to, you know, uh, adjust the market or ensure that there are no bad players within the market, then to a certain degree, the other impact or the other return that you're actually looking for is also connected to that. Would that be correct?
Yeah, I mean, like if I had a fund that was that was accurately able to sort of like predict the hype cycle of a drug company before it took off, and it ended up just being false and it generated like huge consistent returns to my shareholders, they could sue me for not taking part in that. So ultimately it's like it's a legal duty. I am constrained by my LPs as to what I can and cannot invest in. But like you should as a executive of any company, you should try and do like what you've been given money to do, I think.
Do you how do you reconcile when you're right on the logic but you're wrong on the timing? For example, in your on your website, you have two different cases around quantum. So you were shorting quantum to start off with, and then you changed your position. Is that correct?
Yeah, on quantum, when I short quantum, this was like a little over a year ago. Some of the stocks were just at like astronomical all-time highs. And then Jensen Huang, the CEO of Nvidia, came out in a conference and was like, I don't think quantum will be useful for another 20 or 30 years. And the stocks like plummeted down like 70%. But they really bounced back after that, which surprised me because the time horizon of any long-term quantum investor is going to be like literally decades of your life just holding this one position because that's when quantum computing will probably be useful. So either, yeah, the market is more forward-looking than me, perhaps in this case. I might think that why would you deploy capital here when you won't see a return for literally 20 years? But some people are okay with that, and that's why these companies are still worth like tens of billions of dollars, I guess.
Interesting. So, what do you want people to walk away with understanding differently after this conversation?
Yeah, I think I want people to walk away with an understanding that narrative, especially when you're listening to someone who doesn't really have much experience in a space, will not obscure the eventual truth, especially in a really binary field like biotechnology. And just quickly, I'll tell a fun
Yeah, please
story
do. Yeah.
about a company, Taylor company called Cassava Sciences, which was probably one of the best shorts I've ever done. But there was an investor in this company who I will leave unnamed, but he put basically all of his money, which was about $60 million, of which he did not get from biotech or pharma. He got it from tech startups or an adjacent field, purely into this one company because he bought the narrative so much that he was willing to risk like his entire life savings on this company. Even when like really experienced people in the field told him that no, this drug will not work, you've been misled, you don't really know much about like pharmacology or anything like that, anything relevant to the field. But some people can become so absorbed in a narrative that they will just refuse to sort of see reason in that case, especially when it's dealing with like millions of dollars of their money. You become sort of emotionally attached to a position, and ultimately, as we know, the drug failed and the stock went down 90%. And this guy's net worth was just like obliterated because he became too invested in a position, and that's a real problem for investors. And any market participant, I think, should take away that you should never become like emotionally invested in a position you hold.
Would you so you're specifically invested right now in biotech and in quantum. What would be other areas where you're potentially going to look at?
Yeah, I'm not invested or I'm not short quantum anymore. I've moved on from that. My losses. But another field aside from biotech that I'm really interested in is perhaps I think like you can say AI, and that's a very, very broad sort of term, but I'm definitely interested in like these really huge private companies like OpenAI or Anthropic, because as we know, they've gone from like 10 years ago, they were like $1 million company, and now they're at about $1 trillion. So
Mhm.
that's really what any venture capitalist seeks out. But I'm also interested in companies that disrupt the status quo, and that sort of is tangential to my angel investing or venture capital that I do on a company called Gradell Terminal, which is trying to disrupt Bloomberg's sort of really unjustified monopoly of the financial data sector. Because I don't know how many people watching this will be like Bloomberg clients or use a Bloomberg terminal, but you're paying $25,000 a year for a product that you only use probably about 5% of. And I think a system that gives you the same quality of data and all of that, but with modularity, like you can pay for 5% and use 5% will ultimately be a better fit for most serious investors.
So interesting. Do you have a different approach to angel investing as an angel investor versus your investment company two factor? Do you have different positions with that?
Yeah, my positions, I've sort of integrated my personal investment in Gradell into the fund, but in personal investing, I do approach it a little bit differently from that kind of investing I would do with my LPs, because ultimately I know that for my LPs they want sort of like the best possible return with the least amount of risk. And
Mm.
in my personal portfolio, I might want the best possible return with the most amount of risk. So I'm willing to take more risk in my personal portfolio, of course. But it's also like a different philosophy, because when you invest in something personally, the only person who is accountable is you. You're only accountable to yourself.
Yeah.
And you can take sort of more risk knowing that, but you also have to bear the consequence knowing that the like you only have yourself to blame if a position goes badly. But the upside is that you don't have to field a phone call from an angry LP saying that like I lost all your money on a biotech bet.
So just to kind of close this conversation, I think that, we started off with money or like story or truth. We then talked about what short position is. We talked about your experiences and being able to make decisions in uncertain environments. And we talked about your philosophy around short and how you see the short position as an impact to a certain degree and as a market regulator. How do you see your role as the truth bringer? I'm not air quoting that as in disrespect, but I'm trying to put a label on it. I'm imagining like a knight with a sword cleaning up things.
Maybe with like a beaker or a flask or something. Yeah.
Oh yeah, Kurt the Flash. But if that's the way that I'm using words that you use to describe yourself, is there a connection between that persona and that lens of thinking within your personal and your personal investing, your LP investing, and your personal life? Like Laurens Brisbane as an angel investor, like is there a connection between all of those? What would you consider your pathway to impact within this?
I think a lot of the framework that you use when you make a decision with a lot of capital is definitely transferable to your everyday life, especially when you like this might be a phenomenon with other traders or investors, and I know some people who definitely think this way. But if you sort of begin to approach your more everyday life with like an expected value framework. Like when you make a decision, you would think, is this positive EV or negative EV?
Sorry,
That
what's
probably
EV?
expected value.
Okay.
So
Yeah.
that probably comes from the market, because whenever you make an investment, you're evaluating if it's plus or minus EV, and you try and do the most positive EV things. So that can definitely come into your personal life. And I think like it can be a mixed bag, I suppose, when you try and evaluate everything purely from like a rational perspective. Some things that have been troubling you, like social things or something, might seem more insignificant in the grand scheme of things. But it also might make you perhaps too analytical in certain facets of life. But I think a lot of the philosophy in investing is applicable to everyday life. Like a lot of famous investors right now are sort of philosophers themselves. Like George Soros is probably one of the most famous equity investors of all time, and he's dedicated his elder years to building out of philanthropy and philosophy and all of these endeavors. And we have more active people like Peter Thiel or Alex Karp, and Alex Karp literally calls himself like the ontology king. So we can definitely see where philosophy and investing sort of intertwine. And I imagine you definitely transfer some of that just to your daily life.
One of the things that I find really fascinating when I have conversations with investors is the way being able to think in terms of congruency around your values and how you bring your values into whatever it is that you are doing, right? And as an investor, if what I am hearing from you is that one of your values is justice to a certain degree, right? I wonder how that influences, maybe from a subconscious perspective, some of the ways that you make decisions, or how that influences the way that you act as a human in this world. Not that an investor is not human.
Many would disagree. No, I see what you're saying because the values that you've been imbued with, I guess, and that you develop on your own are just evident in anything you do. And with things like truth or justice or fairness or something like that, they're very subjective. Like I will have a different conception of truth or justice than you, and I will
Mhm.
apply it differently in my everyday life. But ultimately, like these are very big factors that influence the way we invest and the way we go about living. And a lot of startups actually have been framed as like solving a philosophical question, which I find really cool. Like the biggest example would probably be Palantir, and I talked about the founders a bit earlier. But yeah, Palantir isn't a traditional company in the sense of its sole goal is to generate like shareholder revenue. Like Palantir is a company that has an ethos where it believes that you should try and forward like American exceptionalism and like you should try and keep the country as the dominant force in the world because they believe that to be the most moral outcome. And I'm not disagreeing with like the framework there, but I think it's really interesting that a company can be founded from like an ideological basis. And I think that's something you didn't really see historically necessarily.
I would disagree with that. There is a couple of things that I think would be interesting for people to consider. A short position is not necessarily the bad force that people think that it might be, and that there are a lot of roles or ways in which it can position itself to be able to be a regulator in the market or to be a bringer of truth and justice. I also think that although you are doing a very good job at defending that, I think that it is very hard to separate between a value, let's say truth and justice, and an investment position, which you say is based specifically on pure logic and on these are the specific facts that are being presented to me, right? You have to have a lot of conviction in order for you to be able to say, well, this is what I believe the logic is, and this is what I believe the investment position should be around this specific thing. And this is the line, the congruency of the line that kind of follows with my values and my way of thinking and my framework in order to be able to bring impact and your definition of impact into the world.
Yeah, you're definitely right that the like an investor with like the nominal underlying values of truth and justice might be more inclined to perhaps be a short seller. They can come join us. But yeah, it is hard to separate your conviction and your how you develop conviction and your opinion like post hoc from your position. And a lot of people sort of make an investment and then sort of justify it post hoc and they look back. But you have to really do the opposite there. But something that would challenge my principles, I guess, would be like if you took me into a chemistry lab or something and you synthesized this protein in front of me and it did what it purported to do, I would definitely change my position there because ultimately, when I invest, I believe that the science is the most important thing. And if the science doesn't work, the investment won't work. And if it does work, the investment will work. And I guess that is tangential to my own values of truth and justice in the markets, I suppose. But yeah, I base my decisions on just the science of the asset.
Does that mean that you're not going to have a short position in markets or in areas where there is a lack of science?
That's a big thing. I would not have a short position in any market that I do not understand because I think that's a really big thing. And I'm glad that you mentioned it with investors who are willing to sort of jump into anything where it's really an emergent field or that you don't really have an understanding of it. If you really want to learn a field deeply, might take you years, it might take you a few months. But when I do not have an understanding of the science or the field, or I don't have anyone who can sort of teach me the science, I just won't invest because ultimately there's going to be more informed people in the market who will be perfectly happy to take my money if I am
Yeah,
wrong.
very interesting. Laurens, do you have any last parting thoughts that you would like to leave with our audience?
My parting thought would be don't invest in something you're not familiar with. Don't follow money just for the sake of it being money. For example, the $60 million man who is no longer the $60 million man. People thought because he had money, he knew everything about the field. That was not the case. You should always follow the science when you're dealing with a quantitative field like healthcare or
Mhm.
biotech. And yeah, just try and separate the narrative and your own personal belief from the actual reality of a subject.
I'm going to ask you a personal question. What advice do you have for someone that has a perspective that is not the mainstream narrative?
I would say if you have a perspective that is contrary to the mainstream narrative, like go for it, totally go for it. That's like sort of how I make my money. But make sure that it is like internally coherent. It's rational. It's a rational perspective. If it's something that is contrarian for the sake of being contrarian, I would not say that is a good idea to pursue. But like, yeah, if you look at it from like really like a teal perspective, you should try and go from 0 to 1. Like that is ultimately a good thing for society. And if you have an idea or a product or anything like that that is really contrarian to the status quo, like yeah, totally go for it if it can make a change.
Awesome. Thank you so much for your time. I really appreciate it. This has been a
Sure.
fascinating conversation. And if anybody is interested in your work, where can they find more information about you?
They can find my work at www.twofactorcapital.com.
Which we will put in the links. And the framework that I think that you mentioned that you want people to consider is the
I would urge people to have a look at a priori like philosophy and investing. Maybe read like a Hayek book or a Ludwig von Mises book. That might
can
be
you
too
put
much
the
of an ask. Like a lot of knowledge is just free online if you know where to look. And definitely I'd say go for it. If you want to learn something, you can do it if you really want to dedicate time and effort into doing it. So yeah, I'll share some resources that I've used.
Thank you so much for your time. I really appreciate it.
Thank you. Thank you for interviewing me.
Thank you.